Here, what's good, family? Man, I am glad to be back. I know it's been a while since we've been here on Talking Stock Tuesdays, man. But I promise y'all, I'm back for good. I am not leaving again. No more hiatuses. I apologize to everybody. I left y'all a little high and dry. I'm sorry. Look, we back though, and we gonna keep running it up. And just make sure you like the video, subscribe, keep the algorithm going. Let's get right into everything, man. You know, it's been a lot going on since the last time I talked to y'all. So we got a lot to talk about. All right. So this is what we're doing tonight is a special night. We're gonna go through a couple things. A couple things have changed. A couple things are the same, but you already know the moral of the story is we're gonna give you the information, the breakdown of what's really going on. No chaser, straight to the point. And this is for people who, might not even be in stocks yet, just trying to learn about stocks, beginners or people that just like hearing the real and hearing it broken down in real terms instead of having to watch CNBC or something like that. You know what I mean? Um, so every Tuesday night, 8:30 p.m. Eastern Standard Time, we will be here. So this is the last time I will be taking a break from y'all. I promise y'all I will be consistent from here on out. Okay, so let's get it. You already see what the title says. Is the AI run over? And we got Michael Burry betting against the boom. Let's get into it. Okay, so what's the agenda? Of course, we're gonna talk about watch list and what the indices are doing and things of that nature, like S&P and Dow and all that type of things. But for headlines, we're gonna talk about is the AI hype wave hitting its ceiling? Why Michael Burry placed his big bearish bets on NVIDIA and Palantir? What the $2,000 stimulus rumors really mean for the market? The truth behind Elon's potential $1 trillion compensation package, and how smart money is positioning while retail chases momentum. Okay, let's get right into it, y'all. Hold on, let me move this bar out the way. I'm sorry. Uh, It's kind of blocking my words. All right. So, first things first, we're going to go ahead and do the normal thing where we talk about how the market has been moving. Specifically today, the Dow Jones outpaced the S&P today and actually hit a new record closing high. The S&P also was green, rose about 0.2%. The Nasdaq slipped about 0.25%. Dragged by weakness in major tech and AI names. So, what to pay attention to? The Dow strength is real. Record high signaling broad-based institutional money is flowing into large cap safer names. The S&P's modest gain shows cautious optimism. The market isn't charging ahead unchecked. The Nasdaq's pullback indicates that the tech slash AI fuel rally may be cooling or pausing for consolidation. My opinion is this mixed structure suggests rotation underway, money shifting from high flyer growth towards more balanced large cap value and dividend plays, not panic, but a caution flag, right? So we've all been hearing the news about is AI a bubble and all those type of things. We are going to get into that later into the show. But to be honest, if you really look at higher time frames on a lot of these stocks, I mean, they were reaching all-time new highs, I mean, week after week after week. And really the pullbacks that they've been on, I mean, if you look at a long-term chart, go to your favorite tech stock and look at its monthly chart. It's probably still at the very top. It barely dipped any. So definitely agree that I don't think a crash is happening or anything like that. I've seen a couple people talking about, oh well, the market is crashing. I don't believe that. I strongly believe that people are just being a little bit more cautious. People are worried about these high valuations of these companies. But we'll get into it. Okay, so let's keep going. All right. So let's talk about this government shutdown. Let's move into some politics real quick and how this is affecting the market. Because obviously, politics probably have affected the market more than any other time in history, to be honest with you. So the government shutdown isn't about politics, it's about control. So we all know that the government is our government, US government, is currently in the longest shutdown ever in history recorded. So, what that means for the US people in the economy, regular US citizens, it's not looking good. A lot of federal workers were furloughed. A lot of them aren't being paid, which means a lot of federal services are either delayed or closing down altogether until the government opens back up, which is very not good. And a very good example of this is flight controls for flights. A lot of people have been not being able to catch their flights. Airports are reducing the amount of flights. They're grounding private jets just because they don't have the people to to cover the jobs, right? To watch the air, which is very dangerous and has real world impact, right? So let's get into it. Budget negotiations are being intentionally dragged out. This creates economic uncertainty, the market's number one enemy. Federal agencies are preparing for spending delays. Some government data releases may be paused or pushed. When data slows, investors lose visibility and confidence. Real world impact, like I just told you, contractors and infrastructure companies delay hiring and payments. Corporations hold cash instead of investing. Financial conditions tighten quietly. Sorry, y'all. Retail traders don't notice until after market shifts. So, what is the market's behavior right now as that all of this is going on? Hedge funds have reduced exposure in hyper growth tech. Institutions rotate into energy, healthcare, insurance, and dividends. Retail keeps buying whatever trended last week. In my opinion, I don't think the shutdown will crash the market. I think it just moves the market into safer bets. So people are moving their money into things that they know is a safer bet than being in a growth stock or something that, or being hyper focused in tech, things like that. People are diversifying their portfolio, which if you've been a member of the stock club on Discord or if you've been watching Talkin Stock Tuesdays, I've been saying this for months and years that you have to diversify your portfolio for sure. I've always talked about that. Um, I hopefully some of y'all caught that gold run because y'all know I called gold like a while ago, and gold took off. It came down a little bit since then, recently, but for like a couple months, gold was just soaring, soaring, soaring. So I hope everybody took advantage of that when I called it. If you didn't, don't worry. Gold is always going to be a hedge. So, all right, let's keep going. But yes, the government needs to stop placing blame and just open the government back up. I understand why the government shutdown is happening. If you really look into it, I get it. But real people's lives are being affected. So that's my opinion on that. Even more than just talking about the stock market. Real life, that's not cool. Okay, let's go. So, Mr. Trump, the man of the hour. We're talking about, I've seen a lot of people talking about this over the last couple of days, which is Trump is floating this idea about giving out a $2,000 dividend payout from the tariff revenue. That's what he says. Okay. So let's read it before I give my opinion. Because I be having my opinions on Trump, but let me read this first and then I'll give you my opinion. Budget negotiations are being intentionally dragged out. This creates economic uncertainty, the market's number one enemy. Federal agencies, hold on now. This is the same thing as the last slide. Hold on. Uh-oh. JC made a hiccup. Okay, well, let's just go off the whim. I don't need the words. Just ignore those words because that's the same thing as the last slide. I didn't realize when I was making. I'm sorry, y'all. It's been a long day. I be working. I'm in school. I got a kid, so it's like a lot. I be trying my hardest to get these presentations up for y'all in a timely manner. So you got to bear with me sometimes, okay? Sorry about that though. But look, let's just talk about it. We already know what this means, right? We already been through this. If you were in America during the pandemic, we already had this rodeo with the STEMI checks. Um, so we know how this goes. One thing I will say though, $2,000 is not a lot of money. And I'm not saying he should give more money, but what I'm saying is you're better off just doing what you need to do to fix everything else. $2,000 checks to everybody is a band-aid. It's not you're putting a band-aid on something that needs surgery. You know what I'm saying? The economy needs surgery. They don't need a band-aid, right? So we have the highest debt ever recorded, which of course stimulus checks raise inflation and they also raise the national debt again, even though it's already the highest it's ever been, despite him running on lowering the debt, which is kind of crazy to me. But the point is, I think it will provide immediate relief, but I think in the long term, it's going to be even worse for regular working people. Because now inflation goes back up. Um, the debt is getting worse. The dollar's value is reducing, even though it's at some of the worst levels it's been since I don't know when. So this is just, I think this is just a political stunt to revive Trump's approval rating after a lot of things have been going on with the government shutdown. Like I mentioned before, last slide, a lot of people are blaming Republicans. A lot of polls are coming out about who people are holding responsible for the government shutdown dragging out this long, and a lot of people are blaming Trump's administration. So I think this is just a quick grab to try to like, oh yeah, let me give y'all some money so y'all can like me again. You know what I'm saying? So that's what I truly believe. Um, we have to be real, man. I mean, one bedroom apartments are like 1,500 now. So I mean, what is $2,000 gonna do for you? If your rent is 1,500, you got two kids, and they're trying to cut your SNAP benefits and things of that nature, and your health care is about to be more expensive. I mean, what is that $2,000 really gonna do for you? Um, so that's just my personal opinion. I know there's people out here struggling that probably are looking forward to that 2,000, which I don't blame you for that. But what I'm saying is just remember that short-term solutions for long-term problems never work out. You cannot put a short-term solution into a long-term problem. It only it's like it's like if you have a disease and you taking Tylenol. Like, bro, Tylenol isn't going to help your underlying issue. You know what I'm saying? So that's my personal opinion. I don't want to get too political about my opinions on Trump, but yeah, that's what I truly believe. I think that's really just a political stunt for approval ratings. Okay, let's keep it going. Okay, let's talk about Elon Musk and him asking for a trillion, not a billy, a trillion. That boy Elon Musk, man, he's a real character. Okay, so let's talk about it. Tesla's board is pushing to reinstate and expand Elon's compensation plan. If Tesla hits long-term performance milestones, total value could approach 1 trillion plus. This is performance-based, not a salary. He only gets paid if the company scales. The milestones are tied to autonomous vehicle networks, robotics manufacturing at industrial scale, AI-driven fleet logistics, energy storage dominance. So what does this really mean? Elon is betting Tesla becomes an AI plus robotics plus energy infrastructure company, not a car company. This is a play to secure his leadership authority during the AI industrialization era. Tesla is trying to position itself as the Amazon of autonomous systems. Now, my opinion, I don't think this is greed. I think it's leverage. Elon wants the freedom to build at world scale without shareholders slowing him down. I truly believe. Now, let me start by saying this. I don't think any one person in the world should be a trillionaire. I'm sorry. Call me a socialist, call me whatever you want. I don't care. I just truly don't believe that. I do not believe anybody should ever be a trillionaire in life. It just doesn't, like, what are you gonna do with it? Like, what are you gonna die with $1 trillion? Like, it just doesn't make sense. But I don't think he's being greedy with this. I do truly believe that he really just wants to be able to have the freedom to operate without having to always answer the shareholders. Um, he lays out what he wants to do. He gives them milestones that he has to hit in order to get his money. But the funny thing is, the part that it says is not a salary. Elon Musk is already a billionaire. He truly doesn't need a salary from Tesla. Elon Musk, when he first signed his contract with Tesla, his original contract was mainly in Tesla stock options. So when Tesla was flying, 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 he was making billions and billions and billions of dollars. So Elon Musk really doesn't need any more money. He needs the freedom to be able to operate. He wants to do exactly what it says. He wants to be the Amazon of autonomous systems. The reason I think the shareholders agreed to this is because they know for a fact Tesla is not going to survive without Elon. You can have another CEO that's brilliant, but he's not going to be Elon Musk. Elon Musk is one of those once in a generation talents. You're not going to find somebody to take his place. So I think he understood that. And that's why he kind of was like, okay, I feel like I can leverage this because I know and they know that they're not going to easily replace me. And if you've been watching Talking Stock Tuesdays for a long time and you're in the Discord, I tell my stock club members all the time, Tesla is not tied to the company. Tesla stock is not tied to the company. It's tied to Elon. I tell everyone that Tesla stock depends on what Elon does, not what the company does, not their earnings reports and their revenue growth and all those things like that. It's strictly tied to how people feel about Elon, the CEO. And he has that much, if he has that much dominance over that company, I truly believe that's why he was able to leverage this. And I've been saying that for a long, long time. If you don't remember that, go back and watch some of these old Talking Stock Tuesdays episodes where I talked about Tesla and how Tesla is solely tied to Elon. It isn't tied to the cars. I've been said that. But I do think it's very, very smart for him to pivot into AI robotics and energy infrastructure. Now, how is this going to fit into Neuralink and Starlink and all those type of things? We have yet to see. I think he might. I just hope he doesn't stretch himself thin like he did before. Because y'all remember when he first started Doge with Trump and he was doing Starlink and all these other things he was doing, um, shareholders were putting a lot of pressure on him. Like, bro, you need to relax. You're stretching yourself too thin. You're letting Tesla go by the wayside because you're too focused on all these other things. You getting into politics and stuff like that. And I think after that time, he realized like, okay, I'm never gonna be able to fully branch out if I don't leverage myself somehow in this situation. So it kind of makes sense why this ended up happening. If you've been watching Talking Stock Tuesdays for a while, you kind of can understand why this happens, right? Okay, so let's keep going. All right, Qualcomm had their earnings today. I think their earnings was about around 3 p.m. I watched a little bit of their call. They definitely beat expectations on revenue and profit. But this is the important thing. The very, 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 very important thing that you need to understand of what about Qualcomm. Their growth driver was not PCs, because you know they make chips. Their growth driver wasn't PCs. It was smartphones in cars. That is going to be very, very essential. Now think about what I just told you about what Elon Musk said. He wants to focus on AI, robotics, and things of that nature. Smartphones in cars. I think that is something that they might have a niche in, Qualcomm itself. Now, there are going to be other big AI players that, of course, now that they know this, they're going to jump on the wave. Some of them might have already been on the wave. But this is the first time I've really heard a company mainly focus on smartphones and cars when it comes to chips for AI and stuff. So we'll see how this plays out. All right, so let's keep going. Their newest Snapdragon chips enable on-device AI processing. This means AI features like real-time speech plus translation, personal assistant memory, on-device recommendation plus personalization, AI camera enhancement happen locally, not through servers. Another very, very important thing. It's locally, not through servers. And if you're a computer person or you do computer science or whatever, you understand why that's important, right? So, why is this a big deal? Cloud AI, NVIDIA data center GPUs was wave one. Device level AI, Qualcomm is wave two. When AI becomes everyday, the market grows exponentially, not linearly. Qualcomm is early, which means undervalue opportunity window. Qualcomm is early in this game. Undervalue opportunity window. I really, really like that. So while everyone is staring at NVIDIA and AMD and all those players, the real money gets made in the companies that brings AI to the masses, right? Okay. I'm really bullish on Qualcomm. I'm not gonna lie. Um, this I think this was a very, very important earnings call. And I also think it's gonna become a wake-up call for a lot of other companies, especially small cap companies that are trying to get into AI. I think this is where they're gonna shift their focus to. So let's watch how that plays out come going forward. Okay, so the man of the hour, let's get to him. Michael Burry. If you don't know who Michael Burry is, he is a very, very famous figure on Wall Street and in just the history of the stock market in the US. He's known for calling the dot-com bubble and also the 2008 financial crisis. He has been known to call bubbles and short things. That's what he does. He is a bear. He's a big bear. Okay? So, Um, Michael Burry recently is making headlines because he put in some big, big put options against NVIDIA and Palantir. And because of his history, people are saying, oh, well, no, no, no. If he called those other two bubbles, maybe AI is becoming a bubble, right? Which some investors have been saying for a little while. But I think when he put his money where his mouth is, I think a lot of people were like, oh wow, he really serious about this. And that kind of made other people think like, ooh, maybe he knows something we don't. Okay. So, but let's keep in mind, let's really break this down. He's not saying that the companies are bad. He's saying that the prices are too high for the moment. So a lot of people are thinking, okay, well, maybe these companies really just aren't really worth anything. They just been getting hyped up. No, 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 no. That's not the case. He's saying the valuations of these companies are way too over bloated. They're bloated, which I partially agree. Why is he making this bet? Both stocks ran parabolic, too fast, too emotional. We all saw NVIDIA's run. We all saw Palantir's run. Man, I remember when Palantir was like 50, 20, 30, $40. In 1 year, it is now at $200. That's a crazy growth. So investors are pricing in perfection, which means they're not really thinking about the challenges that may arise and what if things don't go exactly as planned. They're not valuating that in. Their valuations are saying, okay, well, if everything goes great, this is what we should be looking at. But we all know that things always don't go great, especially when there's money and stuff involved, especially when the government's involved. The government has their hands in NVIDIA very deep. So you know how that goes. So what he's saying is the prices are too high, the valuations are too high. Um, Everyone thinks it can only go up, right? So, um, so what does that mean for us as regular people? While everybody's chasing the top, trying to get in where they fit in, institutions are quietly exiting. They're lowering their valuations. They're bringing their price targets down. They're saying, okay, well, I'm gonna pull out now and I'm gonna buy back in at this lower price. And that's basically what's really going on. Yes, this did send a shockwave through the market. NVIDIA and Palantir dropped a lot. The S&P even dropped after this was announced. So he probably made a little bit of money. But yeah, so the point is though, uh, all both of these are still companies that are going to be very, very valuable in the future. Probably some of the most valuable companies in the future. But they are overvalued. They are highly, highly, highly valued. And a lot of seasoned investors saying, okay, I've seen this play before. I've seen when stocks have been too overvalued before, and I've seen what happens. So they're not trying to take that chance this time, which makes a lot of sense. So just don't think that NVIDIA that mean that he just because he's shortening it, he thinks NVIDIA and Palantir is going to the dirt. It's not going to the dirt. NVIDIA and Palantir is going to be here for the next 20, 15, 30 years. The point is, though, we need to really, really take a step back, take the emotion out of it, take all the hype out of it, and say, okay, what is this company really worth? What are these companies really worth? Forget all the hype and all the hoopla and all the, oh, yeah, AI, it's going to change the world. And let's really look at these companies, take a real deep dive and say, okay, let's let's price in what if this goes wrong? What if that goes wrong? What if they have to do this? What if they have to do this? And then price that in to the actual valuation instead of just saying, well, everything's going to look good. Nothing can go wrong. Never say nothing can go wrong. You feel me? So that's what this is all about. Um, I'm interested to see how it plays out. He might have already sold. We don't know. That's what I'm saying. So don't place all your bets in one investor. That's all I'm gonna say. Okay. Is Nvidia's dominance starting to fade? So this is a question that I've been getting a lot. Nvidia stock hasn't really been going crazy like it usually does. It's still doing very well. They're still doing a lot, but there has been a lot of challenges. Oracle reported a couple weeks ago, Oracle reported that they were having problems being able to get the chips from NVIDIA. They were having profit problems because they couldn't profit because the chips were so expensive, things of that nature. And there's been a couple different stories like that. Um NVIDIA, now that the US is messing with NVIDIA, they can't sell anything to China anymore. Things of that nature have been kind of hurting NVIDIA instead of helping it, if that makes sense. So let's talk about it. NVIDIA controls 80% plus of the AI data center chip market. Their GPUs are still the default choice for training large models. Demand remains sky high and supply is still limited. But major players are now building alternatives to avoid dependence. Competitive pressure is rising. AMD rolling out cheaper high performance server GPUs. Google is designing TPU chips to cut NVIDIA out of cloud compute. Amazon AWS developing custom AI chips for in-house use. Qualcomm is pushing AI directly into phones, cards, and edge devices. Why this matters? The first wave of AI was cloud plus data centers. NVIDIA dominated that, of course. The next wave is local plus on-device AI. NVIDIA does not fully control that arena. Pricing power, margins, and market share may shift as competition matures. So let's be clear. NVIDIA is still number one, but dominance does not last without evolution. So NVIDIA will have to evolve to to be able to compete in this new market that's emerging of other big names and other trillion market cap companies coming and saying, look, man, we don't want to be relying on you. We're gonna do our own thing. It's like when you the man on the block and you got the one product that everybody want, and then next thing you know, another motherfucker pop up. He might not got the same shit you got, but his shit a little cheaper. A couple people be like, man, look, I ain't trying to keep paying that high price. I'm gonna go over here for him a couple times. And you start, it slowly starts, and then you have to evolve to be able to manage that, right? So it's just simple economics, right? All right, let's keep it going. Okay, we've been throwing around that trilly word a lot, man. It's crazy, right? Open AI, the $1 trillion question, right? So OpenAI is being projected for $1 trillion plus valuation when it goes public. And this is what Michael Burry has been talking about with these super huge valuations, not really pricing in the downfalls. Those are the type of things I'm talking about. This would make it one of the largest IPOs in history. This product is not hardware. The product is intelligence itself. ChatGPT has hundreds of millions of active users, fastest adoption curve in tech history. Enterprise plus government integration is accelerating, not slowing. Why the valuation isn't crazy? AI is becoming infrastructure, not an app. Companies will run workflows, decisions, planning, hiring, and operations through AI. Whoever controls the AI operating layer controls the digital economy. Where does the power come from? Microsoft's stake plus partnership gives OpenAI unmatched corporate distribution. Governments are beginning to license AI models for critical systems. AI is now too big to be just software. It's a strategic national asset. And we know that because obviously Trump wants to win the race of AI, which Jensen, which is the CEO of NVIDIA, came out and said he thinks China's gonna win the race with AI, but that's another thing for another day, right? So I mean, Jensen ain't been wrong yet. So we'll see though. But anyways, this isn't just another IPO. This is the birth of a new economic power center. But there's a catch. Regulation is coming from the government, of course. National security interest equals control pressure. Just like I told you, now that the government is messing with NVIDIA, they can't sell chips to China no more. So things like that is going to happen to OpenAI as well. And privacy plus ethical compliance will shape the speed of growth, right? So if you look at this picture down here, I want y'all to pay very, very much close attention to this picture. This picture is the exact reason why people are calling AI a bubble. Just look at it. Just look at how the money is just flowing through these companies just willy-nilly, right? Billions, right? So just keep that in mind. Okay, so let's talk about the bubble. Okay, here we are. Is AI boom or AI bubble, right? Is it a bubble? Let's talk about it. That picture that I put in here, I thought that was funny. It says corporate needs you to find the differences between this picture and this picture. And it says they're the same picture. And it's talking about the dot-com bubble in AI. I thought that was funny. But anyways, AI will absolutely reshape every major industry. But the price movement in some AI stocks is based on emotion, not revenue. This is the same pattern we saw in the dot-com bubble in 1999, the crypto bubble in 2021, and the meme stock bubble in 2021. What is actually true? The technology is here to stay. The use case are expanding monthly. The money being spent on AI infrastructure is real. Where the risk is, some AI stock valuations assume flawless execution. Back to the Michael Burry point. Markets are pricing in 5 to 10 years of growth up front. Without seeing the results, they're already saying, okay, yeah, we guarantee 5 to 10 years of growth no matter what. Very dangerous. When expectations get too high, even good news causes sell offs. So, what is my opinion? The winners will be massive, but not everyone in the hype wave is a winner, which means some of these little small AI companies, if you're not partnering with these big boys, you might get pushed out. That's the point. We all saw what happened to BBAI today after their earnings yesterday. Got smoked. So just keep that in mind, man. So how smart investors play this? Own the infrastructure companies, not the hype tickers. Accumulate on pullbacks, not breakouts. Stick to companies with revenue plus competitive moats. Avoid buying stocks just because AI is in the name. Very smart. Okay, let's keep it going. Sector rotation is real. So not a sell-off, not panic. This is a reallocation phase. Hedge funds are trimming high flyer tech after the AI surge. Institutions are slowly rotating into sectors with cash flow plus stability. This is how the market breathes after a hype cycle. Where the money is rotating to: energy, oil supply pressure plus geopolitical risk equals pricing power. Healthcare, election years always increase uncertainty. Healthcare is a defensive. Insurance and financials, high interest rates equals bigger profit spreads. Gold slash precious metals, hedge against the dollar plus inflation return risk. Why this matters? Retail looks at prices, sees nothing happen. Smart money looks at flows, sees positioning happening. The rotation always happens quietly. By the time retail notices, the move is gone. Opinion. This is where grown-up portfolios are built. You don't need hype to make money, you need consistency. Strategy. Keep core exposure in quality plus dividends. Rotate gradually, not all at once. Add stability first and growth second. Build a portfolio that can eat during volatility. All right. Now, here is my watch list. And these are the next 10 to 15 year future leaders. So I'm taking my own advice that I just gave y'all just last slide when it said to rotate gradually and to focus on the big players, not the ones that are just hype players. This is what is happening, right? So these companies are the ones. So let's talk about it. Now, didn't include dividend stocks and things of that nature in this one. I think I have another slide. Okay, yeah, I did on the next one. Okay, never mind. Okay, we good. So let's go through these tech ones. Microsoft runs the business world. Azure plus Office plus enterprise contracts equals recurring power. Hardest company on earth to replace. Default backbone of corporate infrastructure. NVIDIA, still the leader of AI compute today, not hype. AI infrastructure, as long as models train on GPUs, NVIDIA stays relevant. But watch pricing and competition as discussed. Amazon, not an e-commerce company anymore. AWS is the internet's plumbing. Logistics network, unmatched globally. If the economy moves, Amazon gets paid. Tesla, potentially a robotics plus autonomous software company. It's full self-driving scales. Tesla becomes software margins, not car margins. Robotaxi and energy storage could be trillion-dollar divisions. Google, the silent giant. This is the one I love the most. Search plus maps plus DeepMind plus Android controls data plus distribution, moves slower, but moves permanently. I think Google is still one of the most undervalued stocks in the whole market. That's just my personal opinion. I was happy to see it pop after their last earnings. It was well deserved. Well deserved. If you've been watching Talking Stock Tuesdays and you in the stock club, you know I've been talking about Google and how undervalued it is for a long time. Okay, even in quantum as well. They didn't mention quantum on there, but yes, quantum is on there too. All right, so the next gen emerging leaders. Add these on pullbacks, not on hype spikes. AMD eating into the AI and data center compute market share. Qualcomm AI in your pocket. TMSC, the world cannot build chips without them, which is Taiwan Semiconductor. Palantir, military plus government AI deployment layer. CrowdStrike, cybersecurity equals mandatory spending category. Okay, let's keep it going. Okay, so now these are the diversified stocks that we're watching, right? So we have, all right, my bad. I don't know what just happened. Okay, so we have SCHD, dividend stability, strong balance sheet companies, ET, energy pipeline cash flow, pays you while you wait, good dividends. VYM, I said W, I'm sorry, y'all. VYM, broad dividend exposure with low volatility. AMD, we already talked about Qualcomm, we talked about TSM, we talked about gold and silver. XLE, energy strength fueled by supply pressure and geopolitical tension. KIE, insurance benefits from high interest rate profit spreads. We talked about KIE and XLE a while ago. I hope y'all listen. It's been doing really well since then. KIE not as much, but XLE for surely. Um, the key takeaway is if your portfolio can't survive volatility, it can't grow in momentum. Keep that in mind. Okay. So just to wrap all of this up, I appreciate y'all for taking this time to listen to me yap yap. But let's just wrap it all up with this. Look, we move with intention, not hype. The goal is to not look like you're winning. The goal is to build wealth that lasts. Most people lose because they try to get rich fast. They jump from trend to trend with no strategy. We do not do that here. If you in my stock club, you know I've been pushing this forever. Consistency, stick to what you know, stick to the ones that's really going to be the market movers. Don't just be buying stocks that just are stock just because it's a stock you like. Buy it because you feel like it's going to be relevant in the next 10 to 15 years and important. We build positions slowly, we buy quality, we rotate with the market, we hold through noise, we play the long game, right? Okay, so the key takeaway from this is you do not have to rush to be wealthy. You just have to be consistent longer than everyone else. Man, I want to give myself a round of applause for that last slide. That was a good slide, man. I hope that really turned y'all up and really gave y'all insight of how you should really be playing this market in this time. Man, I am so happy to be back with y'all. Please make sure you like, comment, Subscribe to the channel. It really does boost the algorithm. It helps other people be able to see this information. Join the stock club. The Discord link will be in the description. Um, Other than that, man, I appreciate y'all for pulling up like always. I enjoy doing this for y'all. So, yes, love y'all, and I will see y'all later. All right, y'all. Peace.